Good morning and welcome to the show once again. So let's talk about the profit growth first. And Tarun, I'll come to you. The 2-year CAGR for PAT is almost 13.2%, and it has outpaced the CAGR for your underlying new business. We just want to understand if you could elaborate on the key drivers behind this profit growth outperformance.
So in life insurance, the profit is not only coming from your new business, it is also coming from your renewal business. So as our renewal base is increasing, the profit is expected to grow faster than or maybe equal than the new business. So you cannot compare one growth versus another. We are profitable and will continue to be profitable.
But possible to give us an outlook for FY26 and 27 in terms of APE, VNB and VNB margin as well, alongside PAT and AUM growth that you're targeting for these 2 years?
It would be difficult to give that outlook, but what we have done over last many years is outperform market, and we will continue to do and go in that way. Our profits is growing, our VNB is growing, our embedded value has grown. You have seen the latest number as of 30th June, which was part of the offer document. So we'll continue to perform in that range.
Anuj, so we've seen major shift in your new business mix towards ULIPs, which is almost 55.2% in FY25, and away from non-participating savings products. Is this a deliberate, permanent strategic shift, Anuj, towards higher margin, market-linked products, or a cyclical response to market conditions right now?
Yeah, sure. So first of all, thanks for having us on the show, and a very happy and prosperous Diwali to all our viewers. So on the UL mix, I would like to mention that, last year was an aberration where we saw frenzy in the market. So we saw good demand for ULIPs coming from our customers. But let me share with you that as a company, we have always focused on traditional products, non-par product, par products, protection. And that is where our future focus will be. Because if you look at our customer profile, we have customers from tier 2, tier 3 cities where we have seen that people actually want to buy long-term guaranteed products. So last year was an aberration, our UL mix went up, but if you see the last quarter results, there our UL mix has come down, and we feel that going forward, our UL mix would be somewhere in the range of about 40 to 45%, with traditional mix being higher around 55 to 60%. And that has been our past trajectory also.
Right. Mr. Mathur, I would also like to understand, in the sector that you operate, GST rationalization has been the biggest, news development we have seen this year. So post GST removal, are you seeing a higher conversion rate, any reduction in policy lapsation, or any uptick in the average sum assured per policy? Has that been a transition that you have been witnessing?
See, first of all, it's a big advantage now for the industry. GST exemption is a big thing, and I'm looking at more from the long-term perspective of this. A very, very bright future for the industry, and we have seen actually demand coming from customers. We have seen, as you asked, conversions going up, and we feel that in coming weeks and months, the insurance demand will further peak up. And the reason for that is that there is good insurance awareness, and 18% is a substantial reduction in premiums which will go to the customers. We have passed on the full benefit to customers. So we are very bullish, and we are expecting overall life insurance business to grow. And we are going to grow better than the industry. As we have done in the past, we will continue to outperform. So it's a very big benefit, and as insurance company, we are going to take full benefit of this.
Anuj, I'll once again come to you because we just want to understand how does Canara HSBC Life plan to differentiate itself and gain market share against larger peers like SBI Life, LIC, HDFC Life?
No, thanks. Very good question. So I'd like to talk a little bit about our distribution model. We are a bank insurance, we have bank insurance model because we have two big banks as our promoters, Canara Bank and HSBC. So while we'll diversify, but if you ask me, it's a very, very big competitive edge which we have. And if you see the industry also, the top players are having very, very strong bank insurance model. So our business model will also be more bank insurance focused. Having said that, we are diversifying. We have launched agency also recently. We are adding more and more channels. So it is overall diversification. And if I talk about past history of the company, we have always outperformed the industry by a big margin. We are profit making for last 13 years. We have declared dividends for last consecutive 4 years. We are amongst very few companies who achieved break-even in 5th year. So we are financially very, very strong company, promoted by 2 big banks, and I think the future is really bright. We have over 12 crore customers and a network of 15,000 bank branches, which puts us ahead in terms of the competition, and we are going to capitalize on this. And market share is an outcome of that. As we grow our business higher than the industry, our market share is bound to grow, which we have seen in the past also, in the last 4 years, if you look at it.
I was actually going to come to your, customer base only. Tarun, if you could shed some light on the Canara Bank customer cohort that you've already tapped, and what would, your estimate be as the untapped potential within that base that you operate?
So Canara Bank is having around 12 crore customer, and how we differentiate is we have a segmentation of each and every customer. So we classify into various buckets, salaried person, the person who's looking for a pension and a retirement plan, the person who's looking for, term insurance, the person who's actually good for unit link. So, for example, the HNI people or, customer who are based out of metro, they are more aware of financial products. So that's how we classify the customer into that. The penetration is low, as you saw in the offer document also. We also measure in terms of the branch productivity, the overall performance and overall penetration. So we have a headroom, and over last, many years, couple of years, we have worked very closely with the bank in terms of going deeper and having a higher penetration. So we are very, very positive in terms of increasing the penetration. And as the bank is also growing down in tier 3, tier 4 city, we are bound to grow in these cities also.
All right. With that, thank you so much, Anuj and Tarun, for being a part of this interaction today. Thank you so much.